My goal here is to share about process driven trading. Method used to capture Bank Nifty's 500 points intraday move is also shared in this video. Trading. So I'll divide it into three parts. Number one, open location. Number two, getting the clues from the chart for price action confirmation. In perspective of goal is to go with finding the gossips between the buyers and sellers to identify the strength. And number three is how I mark important reference levels, which reference levels is important, which is not important. And number fourth one, that is about how I take my entry, how I place my stop loss, how I exit at the target point. Now with the live examples, not only aftermarket storytelling, with the live examples. So this is my roadmap to share knowledge in form of free webinar series by the name Trading Made Easy. So each webinar in this 6 free webinar series will be conducted separately. So link to join this free webinar will be shared only in my free Telegram channel. So link is available in the description to join the free Telegram channel, so you'll get access to the all webinar links one by one along with live market updates during the market hours. Once the market open, my first step is to check the open location where the price is opening in comparing with the previous day's range. Simple example, whether price opening outside previous day's range or price opening inside previous day's range. That's my simple goal. I'll tell you why. When price more opening outside previous day's range, there has been a major change which has happened compared to the previous trading session. If market opening inside yesterday's range, there is no big change compared to the previous day's close. Simple. So in this example, where the market has opened, we have previous day low here. So price has opened inside yesterday's range. So my first clue is very clear. When price opening and trading inside yesterday's range means I need to get new information from the chart to find direction. Either I need to take trades on bullish upside direction, whether I need to take a trade on bearish downside direction. So that is very important. Now moving on to the second stage, wow, and which reference level has to be given more priority, which reference level should be given less priority. Very simple. My goal is to focus on fast reference level, or I can call it as a fast reversal level. What is mean by that fast reference level or fast reversal level? Very simple. Just notice the chart here. Price trying to move up, instantly coming down. Price again यहाँ पे trying to move up, coming down. Now you need to understand the difference between the number one example over here and the number two over here. So both are fastly reversing down. But what is the major difference? Try to understand. In this first one, price already coming down. It is just giving a pullback rejection towards downside. So here, what is the original direction? Original direction is bearish. But when it comes to the second example, price trying to move up and then reversing down. So the actual direction, the original direction here is bullish, from which price reversing down. So my first priority is fast reversal. So this will be first priority. Number two will be first priority. Number one here over will be the second priority. And we can see on the bottom, this is also reference level. Fast reversal level. Why? Original direction is bearish. Price reversing. So this is my one more priority level. So I am not marking any random level just like that. Every individual level I am trying to share the logic. I have marked here, these are my two topmost priority level at this stage of the market open. What I am doing, I am doing it after market open, because if open is above this level or below this level, price moving up means, then I need to search for some other reference level. So once market is opened here, I am just trying to mark the fast reversal level with giving priority in ranking of 1, 2 and 3, so that I am very clear which reference level I need to focus. Because यहाँ पे the more problem which trader faces, not clear with which reference level should be given more priority and which reference level should be given less priority. When more the traders are confused, that is where you and most traders are losing money in the market. So very important, give the clear understanding to your mind which reference level should be given more priority. You would have already used lot of indicators, lot of tools in finding the direction, in finding entry, exit, stop loss and target. Now for a few minutes forget about all those concepts and focus here. So simple, my goal here is to find the gossip or find the behavior between the bulls versus bears. Because if price is moving up, clearly bulls are dominating. Price is moving down, clearly bears are dominating. If price is sideways, both are fighting. Bears are coming from the higher levels, bulls are coming from the lower levels, both are fighting. So this is the only framework which is required for price action trading. No point in wasting time in understanding multiple concepts. Just these three things: price trying to move up, bulls are trying to more dominate. Price trying to move down, bears, sellers are trying to more dominate. If price is moving up and down sideways, both are trying to fight. That's it. Just understand, remember this point. That is the only requirement for a price action trader. So I have marked my two reference level here, one over here and one over here. So price action in between this, because we are discussing price action in perspective of fast reversal concept. So in the fast reversal concept, my goal is price let it come to any of this reference level and then I will plan my trades. So now the question is, sir, price is, what if price trading in between these levels only? Relax, because as per fast reversal concept, fast reversal reference level concept, my goal is to react, check the find opportunity only around reference level, not wasting my time in overthinking. Sir, price trying to move down here, can we buy put option? Price trying to move up, can we buy call option? Try to understand. You are a price action trader means your goal is to not check every candle, one candle moving up, one candle moving down. There is no point in wasting time in finding logic for every candle. My goal is to check around reference level what is happening. So here what is happening? Price is almost 1, 2 or 3 hours inside the zone only. Now what's happening? Price trying to make a breakout. So previously what happened here? Previously this zone was dominated by whom? It was dominated by the bearish players or dominated by the sellers. Just closely try to understand the price action here. Now this is not any storytelling, this is what shared live with the traders for free in my Telegram channel. This is a free Telegram channel, the link will be available in the description. Because I was very clear in terms of intention, probably around 115, 119 you could see, above 48,315 spot levels bulls can dominate. So how I have decided very clearly, I will let you know the logic. First, everything you need to understand the logic. I have zoomed in the chart to show you what is the logic going forward here. Just try to notice here, this was bears dominated reference level. Agreed. Now what is happening? Price crossing. And then now the question is, just by prices crossing, can I go and jump and take a bullish trade? No. यहाँ पे we are price action trader. We are not a breakout trader. Okay, break reference level breakout will go and executing this trade. This is not that concept. Fast reversal concept is to see the price action around the fast reversal reference level. This was dominated by the bearish players. Now can you notice price is trying to take a support. Price, this is one bearish candle which is trying to come back down, but immediately price is reversing back towards upside. Now I'll be marking you why 48315 only. Before that, why could have not taken an entry. Now I'll be marking the 48315 reference level. Why 48315 reference level only, not before that? Because Yampe itself price taking support. Why I was not executing, focusing, conformly I was telling ki bulls can dominate. Just see the candle close. Very important. Is this a strong? Now you have a knowledge of price action, right? Now tell me, is this a strongest of strongest bullish candle close? Let me know in the comment section, yes or no. Obviously, this is not a strongest candle closing. This is just a normal small chota sa candle. It's like a time pass candle closing coming in. So what I was doing? I was waiting to see two things. Number one, can you see this 48315? This is the starting point of the downside move in this trading session. Same starting point. यहाँ पे price is not taking support, but not a good candle formation. So I was waiting if the price crossing this level, जहाँ पे bearish players were there, because what I have clues from the chart. First we need to understand, just because some level is crossing bullish, some level is crossing bearish, no. We need to have a backup clarity of which direction market is trying to go. First try to understand, this is the morning low, price trying to came reversed. No clear bearish action. Price trying to move up, rejection, move up, rejection. So now what is this formation is going on? Higher low formation is developed. Higher low formation. When price forms higher low, when bulls are trying to come, that is where price try to form higher low formation. And after price forming higher low formation, first clue, bulls are trying to come. Second clue, this is the reversal level, price is trying to take a support. Second clue, bulls are trying to come. So I have two clues, very clear that bulls are trying to come. That's it. This is the area jहाँ पे sellers started the downside move. If price crossing the zone means with two clues in my favor, higher low formation, price taking support. So above this, sellers can give up. That is the main goal of showing you that why I was telling 48315 spot levels above which bulls can be more dominating the price momentum. Okay. So what's happening? Price was doing its action, moving up and down, and slowly bulls started dominating. That is what I have started giving the follow through update around. Price was sideways here. So now the question is, where is my stop loss? Simple. My stop loss is, this is where the bulls took support, right? The bearish reference level converted into bull support. Okay. And what is my target? Where I will be exiting? Simple rule. Entry is ready, my stop loss is ready. What is my exit rule? Exit rule is simple. Just notice this next nearest reference level. What is the next nearest reference level? Then you see this breakout. This was a downside breakout. This is low made, price was sideways, attempt of reversal, uske baad breakout. So price coming to this, that's my exit. I am happy to exit because here on the higher level still bearish sellers are more there. So that's my exit plan. So what I was doing, I was slowly trying to check the follow through of the price action. That is more important. It's not like just because I told price is moving up, I am just showing the example, live example. No. I am trying to show you that perspective of how I am connecting, getting the clues from the chart on a trading session. Jampe price is giving a directional move. Now the question is, I can easily tell in the aftermarket key, sir, price is sideways here, trying to move up here. I will be buying it and I will be riding this full move. This is storytelling. There is no proper logic. What? This is storytelling. But I want to show you the logic, because if you are a professional trader, every move cannot be captured. If you want to capture all the move, then you are a normal retail trader. You will be trying to lose money in the market. That is not worth. Here price crossed 48,315 and after that 10-15 minutes sideways. So what happens here in this 20 minutes of sideways, 20-25 minutes of sideways, most retail trader will start getting questions in their mind. Ki whether the price will move up because price is sideways. What if it reverse and hit my stop loss? So I'll come out of this trade. This is what retail trader think. Once you have a clue from the chart, once you are confident enough to see that bulls are trying to come, then what is the urgent? If a retail traders, if those who are not in urgent, they can enjoy this reward on towards upside. So now we need to see the follow through candles. What's happening? Price is sideways. One attempt of downside forming a wick. Now my simple attempt of understanding is very clear. Price tried to came down, reverse. Closed above my entry level 48,315. No tension. Simple rule. Now if price comes below this, the bulls will give up, because यहाँ से bulls rejected. If they are coming below it again, they will give up. Now what happened? Price slowly forming a bullish candle formation continuously. Now understanding follow through is important, right? Slowly steadily bulls dominating 200 points, 300 points, 400, almost 500 points. Bulls clearly dominated here. Now how to give that follow through confidence to stay on any position? Simple. Can we see any red candle? First of all, no red candle. Price triggered our target level. Till the target level there was no bearish candle. What is my target level? The previous seller's breakout level is my target levels. Once it got tagged, I am happy to come out. Now the question is, sir, price further move up, how to capture the move? No, try to understand one thing. Price moving up, taking a trade, once our target is met, I am happy to come out. My goal when I am in a position, I need to see the follow through. Is there any bearish candle? No, not even red candle formation. Price smoothly trying to give that momentum of clean 500 points move, going to 48,790, 48,800 without any tension. Now once we are in favor of direction, just notice the price behavior. Price crossed 48,315 around this candle here, probably around 130 candle price cross. Uske baad till 2 p.m. there was no momentum. Almost around at and around 2 p.m. price made a new high. So in this 20 minutes, if you are calm enough, 20 minutes of calmness, and then next 300-400 points went up in just next 15 minutes. What is the happened here? We were in favor of direction. How? We were gathering. That is my logic running in my mind. I was in favor of the direction with higher low formation. The previous fast reversal bearish level converting into an support here. Multiple clues. Higher low formation price. Whenever price trying to move down, bear bulls are coming in. Moving down, bulls are coming in. Moving down, bulls are coming in. Just see the attempt of the bearish players. First they try to move. Next move, range is getting smaller. Third move, just notice this. The range from the bearish players is getting smaller and smaller whenever they are trying to come again in pushing the price towards downside. This is my third clue. Once I have multiple clues in my favor, without overthinking, once I confuse multiple concept in my mind, then it will create more problem. That is where retail traders are facing a big issue of confusing all the methods. One approach, one method, if you are following it, try to be clear with it. Once we get the clue, then my plan of entry is ready. Once my plan of entry is ready, my stop loss and my target. Everything is ready. Once plan of entry, stop loss, target is ready, which is backed up by the multiple confirmation from the chart, then what other level of confidence is required? Definitely not, right? No other level of confidence is much required. Everything is clear in front of the chart. That is where more clear approach can be made. This is the reason I just try to share my free live market updates on a free telegram channel, so most traders like you can also take full advantage of the live learning. Once we are learning more in the live, more it will be remembered, more it will be help to improve the trading skills.